Vacancy Legal Recruitment, a refreshingly unique and personal talent agency developed specifically for legal. Dedicated to the sector and with extensive experience working across legal services and legal technology, we bridge the gap between your requirements and top-tier legal talent. Get in touch today and say hello at vacancy.co.uk.
You're listening to the Today's Wills and Probate podcast, one of the leading sources of information for the wills and probate sector. Don't forget to subscribe and sign up to our free newsletter at todayswillsandprobate.co.uk and follow us on LinkedIn and Twitter.
Hello, welcome along to the latest Today's Wills and Probate podcast. Today, I'm joined by Dave Newick, a regular of the Today's Wills and Probate podcast and the CEO of Arken Group. We are talking about a report that Arken published a little while ago called Strategically Navigating a Consolidating Estate Planning Market. And the topic of conversation, unsurprisingly, is what's in the report, what we need to be thinking about as professionals, these changing market dynamics. It's something that we've touched on once or twice in the past, Dave. Thank you so much for joining the podcast.
Wonderful to be here again. Thank you for the opportunity. And yes, you're quite right. It's a changing market, isn't it? So great, as always, to be talking about these sorts of things and exploring some of the market dynamics and some of the things that are changing.
So before we launch into that, very quickly, and as I say, you've been on the podcast before, but a short intro to who you are, Dave, and what you do, please.
Sure. Yeah. So Dave Newick, Kiwi by birth, been now in the UK for 7 years. So I go back home and people can't understand me, and I come back from New Zealand and people can't understand me. Such is life as a Kiwi in the UK. I am the CEO of the Arken Group, as David said, and that encompasses three different businesses: Arken, the new escrow platform, and a business in New Zealand called Footprint. All three of those are fantastic leading platforms, and I sit across all of them with the assistance of a very capable senior leadership team who keep me sane.
We were just saying before we started recording, running a business based in the time zone here and New Zealand no doubt presents its challenges.
Yeah, adds a few wrinkles, David.
Let's dive right into the report. You have been on the podcast before talking about the great wealth transfer. I know that's a big talking point that you're very keen to share with the industry. What do you see at the moment is happening in and around the estate planning market? You've described it as consolidating. How does that manifest?
Yeah, so what we're seeing is the acquisition of smaller high street firms by larger players who are actively in the market to acquire will banks and to acquire law firms. And that's happening at all tiers of the market. So you've got different organisations who have a different investment thesis, who are buying established mid-tier and large firms, and they're generally backed by private equity funds which have come into the industry. Then you've got other organisations who have a thesis around acquiring just will bank data from organisations that are looking to exit and perhaps retire. When we look at that, David, there's a few things that are driving that change, because if you think historically, there were a number of very large firms in the market and a vast number of high street firms. That is still true, roughly, if you look at the pyramid of law firms in particular. So you've got still a large number of smaller firms, but what we're seeing is that the total number of firms is starting to diminish. That is driven by baby boomers retiring. So the oldest baby boomer is 78, and I know that we've spoken about this before on different podcasts, so I won't belabor the point, but it is certainly one of the drivers in the industry, because people are starting to look to retire. As that then starts to happen, they're looking for ways to exit their practice. That is where consolidators are starting to realise that opportunity, because it's driven by a macro trend, and are starting to acquire those sorts of businesses. And typically, you've got to look at, and we touch on this in the report, the lack of succession planning and the change in workplace dynamics in and around where young lawyers are working, and their desire to use technology and their desire to have a life outside of what some might say is a very traditional kind of a law firm career, where you're expected to work very long hours, and that's just almost a law firm tattoo, if you like. The key part to that is that if you can't attract people in to take over your firm, if you don't have children or other people in the firm who can carry that on, then what is your exit strategy? So we're starting to see this massive kind of change, and what's happening is that the firms that are PE backed or are just very commercial and have their strategies together are starting to get large very quickly through M&A. With that, of course, you've also got some of the very established large players who are also going about growing, perhaps not so much through M&A, but by leveraging their very real strengths in having large technology teams and marketing teams, and looking at how they can leverage the vast amounts of data that they've got in a really practical way. So you're going to hear, I guess, in the market, and I know a lot of people are talking about it, the importance of data. If you look at the M&A strategy and you look at the general growth of large firms, a lot of that is based on data.
I want to come on to new model law firms shortly, because as you say, you allude to the fact that there's a succession issue, and long established in the law, in all fairness. I mean, I often equate what's happening in law to what's happening in medicine, because that's a frame of reference for me. My father's a GP, and what's happened in medicine is that traditional almost buy-in to the practice, buy-in to the partnership is all but gone. And the same sort of levels of commitment that you might have seen in previous years amongst partnerships simply isn't there. And so what you have in medicine is the same issue you have in law, which is where equity partners are diminishing.
Yes.
And you've got this rise of sort of the new consultant partner, if you like, for want of a better word. And it causes a big issue when it comes to succession. But I want to dive a little bit into the value of these firms as well, because the report makes very, very clear that unless you're leveraging data and technology, that actually the value of these firms, and very specifically those will banks, is quite low, because there's a lot of work involved in unpacking that information once they've done the acquisition.
Within the market, typically you've got a whole bunch of high street firms and other firms who don't have any strategy around data, who don't have any digital data. All of their data is, in fact, if you're lucky, held in a CRM, but in some cases it's not. Anything that is held in a will is held in a hard copy in a will, which is probably in a filing cabinet or somewhere in a basement. That scenario is played out in a lot of circumstances when you think about the sort of 5,243 firms in England and Wales who do wills and probate. Then you've got other firms who are somewhere further along their digitization and sort of technology adoption strategy, who maybe have a CRM, but they're not leveraging the data that they've got, because the data is still not digitized. Then you've got further along the continuum people who are perhaps further along with having more digital data, but they're not leveraging that data. So they're not segmenting it. They're not using that to target and leverage business growth. An example of that would be that in every firm, whether it be a law firm or a will writing firm, there is a vast amount of new client opportunity held in the beneficiary data held in a will. There's a vast amount of opportunity within a firm if you were to use the data of saying, hey, this person's just bought a house. And the amount of times I've spoken to firms who say to me with a smile on their face, you know, Dave, we know that there's opportunities if we were just kind of able to work out that the same client is buying a house in the conveyancing department, or perhaps, you know, in another expression, is getting divorced. So we could actually kind of leverage all those opportunities, but they just never get to it. Why don't they get to it? Because they're really super busy operationally, and they're flat out seeing people, and they don't have the resources of the larger firms who can then start to invest in some of these digitization and technology strategies. Having said that, let's return back to the group who are perhaps at the furthest end of the continuum, who don't have any technology. What happens with them? Typically, what we're seeing is that baby boomers are starting to retire them. They start to look for an opportunity to get out of their practice, and they're struggling to get any value from their practice if they predominantly do wills and probate, because they can't prove the future revenue streams held in what is their major asset, which is their will bank. They can't prove it because the data is not digitized. There's no way in which that data can be qualified. And so therefore the value that is attached to that by any potential acquirer is very much diminished. Whereas if the data was digitized, say for example, if somebody was an Arken client, then straight away you've got digital data. Straight away you've got an opportunity to leverage that data and to interrogate that data. So that is a problem for organizations, small organizations in particular, who are looking to get out. The other consideration that is quite real around that is the risk component, because people who are looking to buy will banks don't want to buy will banks that have a whole lot of risk attached to them. What you don't need is a scandal which may come at some stage downstream because of things that have been missold, because there's been inappropriate trusts that have been sold in, because there's been a whole range of different things which constitute risk for any acquirer. And unless you can prove that risk doesn't exist, then you're going to struggle to sell your will bank. So a lot of that then means that the outcome for those firms is that they're stuck with having to fund PI insurance, or they just take a greater impact and sell the practice for pennies in the pound because they can't prove the value.
There is definitely a data cleansing issue here, isn't there? And indeed, the message here is that firms who have got a pretty good handle on this are ultimately going to be in a better position, whether it's M&A or even just their own sort of growth trajectory to take advantage. Let's move on and talk about models of employment, because as I say, I equate some of the experience here to other sectors, and what you're seeing in the law in particular is this proliferation of self-employed consultant style lawyers who operate under firm banners. That is something else that you pick up in the report as a changing dynamic in this sector. Do you see that that's going to continue to be a growing trend in your view?
Yeah, I think so. Just speaking recently with different people about that, a lot of that is driven by the fact that certain generations within the workforce don't want to work in the same way that perhaps, use it as an example, baby boomers did. There are other things in their life that are of value. What they want to do is they want to use their time as efficiently as they possibly can. And so that's very true of Gen Xers and of millennials in particular, where the world and their world is full of lots of things, not just work. And that's quite different when you think about the traditional trajectory, that if you were in a law firm, you're expected that was your thing and that you would be 100% focused on that, and you would burn whatever midnight oil you needed to get the job done. People now are expecting technology. They're expecting that they will have efficiencies, and they're looking for the opportunity for flexibility and to have a little bit of freedom, because the traditional model for them doesn't work as much. And society, I guess, is very much about rewarding people who can earn the same amount of money, but are rich in different areas of their life. So it's not just about a financial return. It's not just about a career kind of trajectory. It's about an appreciation of having richness in relationships with your kids, with your friends, with your health, with your well-being. All of these things are things that are now kind of spoken about a lot more. And I think all of those things drive society, and we're not immune to that as an industry sector, to see these changing employment dynamics.
Well, no, because as is my understanding, recruiting, particularly within technology, is very challenging. Programmers and that kind of thing now command very, very high salaries.
Yes.
It's a very highly skilled, highly paid role. Organizations have got to react to that. You, for example, are an exponent of the 4-day working week.
Yes.
Has that been a very positive innovation for you in terms of your recruitment? How has the ability to recruit remotely impacted your business? And therefore, have you been able to bring in expertise that you wouldn't have been able to bring in otherwise in the locality that you're in?
Yeah, look, it's been massive for us. We first adopted the 4-day week in lockdown, so in I think it was October 2020. That has just been transformational for this business in terms of retention, in terms of employee buy-in, in terms of productivity. The 4-day week, to answer your question, has been brilliant in recruitment. People are looking for flexibility, and we don't work on a Friday unless you happen to work in customer support, in which case you don't work on a Monday. Everybody works a 4-day week. Having said that, sometimes I'm working on a Friday. Other people in the business are working on a Friday. You do what needs to be done, and there's a lot of kind of email monitoring that goes on. But effectively, people have the freedom to go and do what they need to do. Now, that's really attractive for people for those lifestyle reasons. And what it does is it gives people time to go and do things themselves, so that holistically their life is better. And that reflects well on their sort of buy-in to work, because we can give that to them. We give them that opportunity to go and spend time with their elderly mother or whatever the case may be. So yeah, look, 4-day week's been massive. And I think a lot of firms are starting to look at this now and starting to look at much more flexible working structures, because otherwise you're going to really struggle to recruit. And certainly in our area, recruiting developers is not easy.
But there's a challenge here between, and particularly perhaps more acute for law firms, because customers will vote with their feet.
Yes.
So if you're a law firm that's perhaps trying to do the 4-day week on the one hand and create flexibility for staff and that kind of thing, but your customer base, which increasingly is attuned to 7-day availability, live chat and that kind of thing, that suddenly starts to clash a little bit if you're not too careful.
There is a customer responsiveness and customer experience aspect to this, absolutely. And you need to be really conscious of that. One of the things that can really help with that, though, is when you look at technology, automating a lot of the tasks that would normally require human intervention. So, and this is, if we come back to the law firm piece, that's what we're seeing happening a lot. And AI is certainly driving that along. For example, we have introduced our AI chatbot. Now that just links to all of our data that we've got mountains of, to enable users to have any questions answered. That's just a small example. What we'll see increasingly happen is that there will be this automation of tasks by using AI, and I think it's happening already. A lot of firms are using AI to do exactly that. We can expect that technology and automations and society trends will continue to play a big difference in the way that people work in law firms in particular.
And just to finish that point around flexibility and creating that within an organization, there has been a move by technology providers to be more facilitative of that around your pricing models, around per fee, per user pricing structures, that kind of thing. I think traditionally case and matter and workflow management was sort of one price, and it was a pretty hefty price tag. You as organizations have responded to that need.
Yeah, that's right. Yeah, and that's a really good iteration, isn't it? Because if the industry is changing, you must change with it, and you must recognise that there are different organisations of different sizes with different needs. Different organisations will have their own different pricing strategies. If we look at that in particular, for us, we tend to have an unlimited user approach. And our success metric is the number of documents. So that works because it's going to work at all levels. You might have somebody who is doing 5 documents a month, or a firm who's doing 1,000 or more, and they just pick the plan that's appropriate for them. So for us, that works really well, and we know that we've got a lot of feedback from our clients that also works well. Other organisations use a per user pricing model, and for that client tranche that they're targeting, that's something that some organisations prefer. So I guess it comes back to that pricing strategy piece.
We're heading towards the end of the discussion, and there's one big takeaway that I wanted to end our podcast on today, Dave, which is about distribution for firms, and the fact that digital marketing is very challenging for lots of organizations, and it's a very saturated marketplace, and that there are developing models of distribution occurring, particularly at sort of volume players, and I'm thinking about Co-op and the Saga tie-up here, where there's an opportunity for two organizations to look at how they develop their respective client bases to grow and scale. How can firms in that environment differentiate themselves and expand their routes to market?
Yeah, well, look, it's a really interesting change up, isn't it? Because you've got some very large firms who are accessing and partnering with very large consumer organizations. And because they've got the scale to cope with that can be quite disruptive, because they're working at the coalface in partnership to secure consumer eyeballs. And so that is quite disruptive in itself. So the question then is, for a firm that isn't absolutely massive, how do you leverage that? And how do you kind of make the most of that? Well, the first thing you could do is to find partnerships yourselves. And many firms do this, but if you looked at partnering with financial advisors, for example, or accountants, or other forms of introducers, and some firms do this really well, we know because we partner with them, and some firms don't. So how is it that organizations can actually leverage the same sort of strategy, which is effectively to be a part of the disruption? How do you make sure that you are accessing large numbers of, let's call them cases or estate plan cases, by being in front of where the demand actually is generated? We've talked about the previous example where we've got large firms who are partnering with consumer organizations. That's probably out of the reach of smaller firms. Escrow has a ecosystem. What it does, it brings together the financial advisors and consumers and legal services providers. And so the opportunity for legal services providers is to participate in an ecosystem where, for example, they might have an operation in, let's say, Cheltenham. There's a bunch of financial advisors in and around Cheltenham who are saying, okay, gee, I don't have any particular affiliation with anybody in Cheltenham, but I want to work with somebody local because I want my clients to be able to pop in to see somebody or have a coffee with them or whatever. How do I arrange that? Well, that's exactly what escrow does. It enables the local firm to say to put themselves in the ecosystem and say, hey, I'm here. And then when the financial advisor goes to find a partner who can deliver a trust, a will, LPAs, or other sorts of services, probate, or whatever it might be, that they can go and locate those people. And it's all done within a digital ecosystem. It's super, super easy. Now, the way that generates the demand is really important, because when you start talking about being disruptive and getting in front of the eyeballs, there are 27,000 financial advisors in the UK. That's just licensed financial advisors. Not all of those advisors do estate planning, but some do. And there are various different service providers around who deliver to that market. But what you're finding as a result of the Great Wealth Transfer is that there's this renewed enthusiasm and interest in estate planning. And so the escrow thesis is to make estate planning accessible for every financial advisor globally, because it's not accessible at the moment. It's difficult. It's not digitized. It's not easy for them to deliver us one more thing for them to do. And so escrow is disruptive in the sense that it makes it super easy for mid-tier firms to access that market, because we're making it super easy for the financial advisors to deliver estate planning advice. Financial advisors have to, under consumer duty obligations, meet with their clients at least once a month. And for high net worth, it's going to be more like once a quarter. That's a great opportunity, because you're actually accessing a very high caliber of individual. We know that financial advisors typically only service those people who have assets above a certain high level, and therefore the average value of that estate plan is probably going to be a lot higher than perhaps the average that you would get from somebody who walked in off the street. So there's a whole bunch of things that are happening in that marketplace, and when you put that together with the sort of the overall digitization that we're starting to see in the industry, and the pressure that creates at the lower level of the pyramid, we're in for some interesting times in 25 and beyond.
A couple of key takeaways, I think, for me from the discussion, and it's been great to have you on the podcast, Dave. Thank you. One is that we have to get better at understanding the data that we hold in these will banks, certainly if we're going to realise some value out of it. 2 is that this is a changing employment landscape. There is a rise in this consultant model of employment. Whether that's a fad or whether it will remain, regardless, firms have to adapt to the changing desires of their employees. And the third piece today that I really take away is that scalability piece, that finding your marketplace. We within our own business describe it as fishing in new ponds. Whilst we know there's an opportunity to fish in our existing pond, and we've talked about firms not being particularly good at that, we have to, in order to grow and develop the business, continue to look at how we fish in new ponds. So yeah, really interesting, and I really appreciate you joining, Dave. Thanks so much for joining.
Well, thanks, David. As always, a great conversation and very enjoyable. And look, if anybody wants to download that white paper, I'm sure there'll be a link here in the podcast or there or thereabouts. So, but jump on the site and you'll see it under our insights area of the Arken legal website.
Yes, strategically navigating a consolidating estate planning market is available on the Arken website. The Today's Wills and Probate podcast is available on the Today's Wills and Probate website and also available on your preferred podcast provider. My thanks to Dave. Thank you as ever for listening, and we'll see you again soon.
You're listening to the Today's Wills and Probate podcast, one of the leading sources of information for the wills and probate sector. Don't forget to subscribe and sign up to our free newsletter at todayswillsandprobate.co.uk and follow us on LinkedIn and Twitter.